that drastic decision from OPEC to slash oil production, also how it could seriously boost Russia's war effort in Ukraine and also raise gas prices here at home. The Alliance of Petroleum Exporting Countries is meeting in Vienna, Austria today, announcing it will cut oil production by 2 million barrels a day, just months before a European Union ban on Russian oil imports actually takes effect and weeks before the midterm elections here in the United States. Joining us now to break it all down, what it means for us, ABC News business correspondent Alexis Christoforous, also chief oil analyst for OPEC, Denton Cinquegrana. Denton, you know, President Biden addressed the decision earlier today before he took off to Florida, where we just saw live pictures. He says he's concerned that it's unnecessary, this slash. So how do you think the impact of gas prices will look here in the United States?
Well, right now we are seeing gas prices move higher. But again, I don't think outside of some individual cases, California, for example, that $5 average that we saw nationally in mid-June, I don't think we're going to approach those levels for a couple various reasons. One, the formulation has changed in gasoline. Right now, the market is being supplied with high RVP gasoline, quote unquote, winter grade gasoline. We're also at a time of year when gasoline demand tends to be a little bit lower. So it should give inventories an opportunity to pick up, because right now we're running not just on the West Coast, but all over the country, kind of well below where we might normally be. So sure, that's concerning, and gasoline prices are moving higher. The question is how much. I think we could go up another 10 to 20 cents here in the short term pretty quickly too.
Well, Alexis, there really are two options here, right? If foreign oil imports are going to keep spelling trouble for the U.S., boost oil production here at home, or speed up our transition to alternative energy sources and electric vehicles. So which one of the options do you think is more likely at this point?
Well, Kira, they're both valid ideas, and they're going to require collaboration on the part of Congress, bipartisanship on the part of lawmakers, certainly at the federal level, and we know that that is always a challenge. More has been happening on the state level with regards to what you were just talking about. New York recently joined California and now wanting to ban combustion engine cars by the year 2035, but Democrats and Republicans across the board are largely divided on how to deal with our energy going forward in this country. And we also saw President Biden lash out against the big oil companies, saying that they are profiting off the backs of these higher oil prices. ExxonMobil alone made $18 billion in profits from May to July. You've got Democratic Governor Newsom in California now asking for a windfall tax on the earnings of those big corporations. And for their part, big oil is coming back and saying, you know what, the Biden administration's energy policies have been contradictory, and they need to find better ways to produce oil and move oil around within our country in a more effective way and stop bashing the oil companies.
So, Denton, how do you see that going down?
Yeah, well, a lot of this goes back to 2020 and the pandemic, when we had low demand, low margins, and companies, frankly, were not making money to invest in future production. So where was the administration back in 2020? Well, it was a different president at the time, obviously, but where were they to, help out the industry when they were really several of them were ready to go under? We've also saw multiple refineries shut down because of this low margin and low demand environment that we're in 2020. And a lot of refineries are also transitioning to making biofuels like renewable diesel and sustainable aviation fuel. And then again, when you transition this refinery to make those renewable products, you don't nearly get as much as you would at a traditional hydrocarbon refining. So say, for example, a refinery that makes 100,000 barrels a day of diesel, and it gets transitioned to making renewable diesel, it's only going to make 35 to 40,000 barrels a day. So you lose some production there. But again, a lot of this stems back to 2020 when we had the pandemic. Now, as it pertains to electric vehicles, yes, they're coming, but it's going to take some time. You don't just flip over the vehicle fleet just like that at the snap of a finger. So, for example, if I bought a car, say in the next 2 years, chances are, unless it's a lease, I'm going to hold on to that car for about 10, 12, maybe even 15 years. I work from home now, as you could clearly see. And I don't drive so much. So if I get a new car, that's going to probably last me 15 years. That takes me out towards almost 2040. The vehicle fleet turns over very, very slowly, and that's something we also have to consider going forward.
So, Alexis, you know, the EU ban on most Russian oil imports is set to take effect at the end of the year. So as part of sanctions over Russia's invasion of Ukraine, how does this move help Russia's war effort right now?
It basically gives them more of a war chest, if you will. It helps Russia continue to have a revenue stream from its oil. You know, the 7 wealthiest countries, the G7, were going to try and put a cap on the price of Russian oil on the global markets. Now, this production cut today by OPEC Plus really undermines that effort. So it's sort of a de facto support, if you will, of Vladimir Putin and his war in Ukraine.
So, Denton, what do you say, what are your thoughts on the president, actually, as he's come forward and really called out big oil and said, look, we're in a tough time. You're making tons of profit here. You need to not gouge the American public. You need to not raise prices. You need to do your part here as well.
Well, at the end of the day, the market sets the price. So, again, don't shoot the messenger, and that messenger is not me. The guy you're buying gasoline from on the corner station, right now, he's barely making anything when you consider real estate costs, labor costs. And the biggest thing for the retailer right now is credit card swipe fees. As the price goes up, those swipe fees go higher. So they're getting absolutely destroyed on that. And right now, some states, based on our data, we see retailers selling gasoline that's either at cost or even they're losing money by selling gasoline. So that's one of the reasons why prices are going to go up. Some of those margins have to be restored. So that's a big thing going on right now. As far as the OPEC plus OPEC production cuts, you know, a lot of the devil's in the details, if you will. OPEC had been really underproducing what they said they were going to produce. So, for example, over the past several months, we see them say, hey, we're going to increase by 400,000 barrels a day. They've only come up 250, 300. So this 2 million barrels a day is probably closer to 900,000 barrels a day in real life.
Denton Cinquegrana, also Alexis Christoforous, thank you both so much.
Thank you.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.